With a developing bank crisis and economic data recently pointing towards inflation moving higher again, Jerome Powell and the Fed are stuck between a rock and a hard place. Do they continue raising rates to fight inflation, or do they pause to prevent bank runs and restore confidence? What's up guys, it's Brandon from Amphibian Trading. Before we jump into the video, make sure you hit that like and subscribe button so you don't miss any future updates. Okay, let's get started by taking a look at the CME Fed Watch tool. You can see just how quickly the projected rate hikes are changing as we remain in a very news-driven environment. As of today, the market sees a 59% chance of a quarter point hike versus a 41% chance of a 50 basis point hike at the Fed's March meeting. While just yesterday, those odds were completely different with a 68% chance of a 50-point hike. If you look back a little bit further to a week and a month ago, before we started seeing inflation data pick up again, you can see the odds of the 50 basis point hike were very slim. Then the inflation data started coming in hot and those odds increased. Now that we have a potential banking crisis, those odds are dropping again. So this is something you definitely want to monitor as it's changing very quickly with the news and economic data and can drastically move the markets. Let's jump over to the NASDAQ now, where the bears got their way this week as the index plunged over 4% and closed right near the lows. Monday morning, we gapped up and ran right into resistance at this newly formed trend line. From there, the market pretty much went straight down all week and picked up 2 distribution days along the way. The NASDAQ also sliced through all of its moving averages and saw consecutive days of net lows, turning both signals of the market stoplight indicator to red. It continues to get worse as the NASDAQ also sliced through the 50% Fibonacci retracement from the October low to February peak. That leaves just the 618 retracement as a final stand for the bulls. The one positive thing this week was that the NASDAQ managed to have a golden cross on the weekly chart with the 10 and the 40-week moving averages. However, for now, until the market gets some clarity on the banking crisis and what the Fed might do, this is going to continue to be a risk-off environment. Everything from stocks, the dollar, and yields were all lower, while the only thing positive was the VIX, which is signaling there's going to be more uncertainty and volatility ahead. So at this point, you want to continue to stay focused on stocks that are displaying relative strength and watch for those stocks to build out proper basing patterns as the indexes continue to sort themselves out. Thank you for watching, and if you enjoyed this video or found any of the information useful, please go ahead and hit that like and subscribe button so you don't miss any future updates.